Let's talk tax, because the way you handle your finances is about to go through one of the biggest shifts in a generation. What you knew last year, or even this year, probably won't be enough to keep you on the right side of HMRC in 2026. So, to make sure you're prepared, we're breaking down an incredible analysis from the experts at My Tax Account. So, you think you've got it all figured out? All the UK tax deadlines, all the rules for 2026? I'd suggest you think again. If you're a sole trader, a landlord, or a company director, there are some major changes on the horizon that are absolutely going to affect your bottom line. Getting this wrong? Well, that's just not an option. And just so you know, this isn't just our take. All this insight has been arranged and developed by the pros at My Tax Accountant, the people who live and breathe this stuff every single day.
All right, so here's what we're going to cover. We'll start with your 2026 tax wake-up call, then dive into the MTD reporting revolution. We'll look at a new way to calculate your tax, what's happening with your investments, how to avoid those nasty penalty pitfalls, and finally, your expert tax solution. Let's get right into it.
So let's kick things off with your 2026 tax wake-up call. And believe me, this is way more than just a few new numbers on a tax form. What we're looking at here is, and this is no exaggeration, the biggest shakeup to self-assessment in a generation. It's happening right now. And honestly, being unprepared is just not an option. The old way of doing things is officially on its way out. And that brings us to the first major change, the MTD reporting revolution. This is all about a fundamental shift in how you report your income. So what on earth is MTD? Well, it stands for Making Tax Digital. It's HMRC's new system, and it means you have to keep all your records digitally and then submit tax updates every quarter using special compatible software. The annual tax return as we know it, yeah, that's being replaced. So who needs to worry about this? Well, from April 2026, the magic number is £50,000. If you're a sole trader or a landlord with a gross annual income over that amount, MTD is mandatory for you. Stay with me, the next point might surprise you. So here's how it'll work. First, you've got to keep digital records. That shoebox full of receipts under your desk, it's time to say goodbye. Second, you have to use HMRC-approved software. Third, you'll be sending income and expense updates to HMRC every 3 months. And finally, you'll wrap it all up with a final declaration at the end of the year. Of course, a change this big doesn't come for free. According to HMRC's own research, businesses should expect a one-off cost of around £285 just to get set up. And after that, you're looking at an ongoing cost of about £115 a year, mostly for software subscriptions. And here's a pro tip for you. When HMRC says digital records, they mean thorough digital records. We're talking about everything. Sales invoices, expense receipts, bank statements, even your crypto transactions if they're part of your business. The level of detail required is a whole new ballgame. Okay, so we've covered the process, but what about the actual pounds and pence? Let's get into how the calculation of your tax bill is changing, because this is where you'll really feel the financial pinch if you're not paying attention. Now, this is a big one for company directors and investors. From April 2026, dividend tax rates are going up by a full 2 percentage points for both basic and higher rate taxpayers. The basic rate is jumping from 8.75% to 10.75%, and the higher rate is going from 33.75% up to 35.75%. That's a significant hike. Let's make that real. Imagine you're a director based in London, and you pay yourself a £40,000 dividend. With these new rates, your personal tax bill is going up, plain and simple. It's a direct tax increase you absolutely have to factor into your plans for 2026. And here's a little something, a kind of hidden tax rise. Did you know the personal allowance, that's the amount you can earn before paying any income tax, is frozen at £12,570 all the way until 2031? This creates something economists call fiscal drag. Basically, as your income goes up with inflation, more and more of it gets dragged over that frozen threshold, meaning you pay tax on it. It's a sneaky way your tax bill creeps up over time. All right, moving on. Let's talk about the bigger picture. Your long-term wealth. There are some huge changes coming to reliefs for capital gains, and maybe most importantly, inheritance tax. This is crucial for anyone with a family business, a farm, or significant property assets. Okay, you need to see this. This is a massive shift. Before, reliefs for business and agricultural property could give you 100% off your inheritance tax bill, and it was totally uncapped. From April 2026, that 100% relief is now capped at £1 million per person. Anything above that only gets 50% relief. Honestly, this is a total game changer. For those multi-generational family businesses and farms, which are often rich in assets but not necessarily cash, this could create enormous inheritance tax bills that simply didn't exist before. Estate planning just became absolutely essential. So with all these new rules and complexities, the risk of making a mistake has obviously gone up. And you know what else has gone up? The penalties. HMRC's system is tough, and saying, "I didn't know," just won't cut it.
It all starts with the familiar £100 fixed penalty. If you miss that January 31st deadline by just one day, boom, you're hit with it automatically. And this applies even if you don't owe any tax. It's purely a penalty for filing late.
But it gets so much worse so quickly. After 3 months, they start adding on daily penalties of £10, which can go up to £900. 6 months late, they'll add another penalty of 5% of the tax you owe. And at 12 months, you guessed it, another 5%. These things stock up fast and can become crippling.
Right. We've talked about the new processes, the higher taxes, and the stricter penalties. I know, it's a lot. So now let's switch gears and talk about how you can actually navigate all of this with confidence.
Let's boil it all down. Here's your essential checklist for 2026. First, if your income is over 50 grand, start preparing for making tax digital right now. Second, factor those higher dividend tax rates into your financial planning. Third, if you own a business or farm, you have to review your estate plan because of those new IHT caps. And finally, whatever you do, do not miss that January 31st deadline.
Look, I get it. This is a lot to take in. The tax system is getting more complicated, not less, and the stakes are higher than ever. It's totally normal to feel a bit overwhelmed by it all. But the good news is you absolutely do not have to figure all this out by yourself. The team at My Tax Accountant specializes in helping people just like you navigate these exact challenges. Whether you need to get set up for MTD, structure your income more efficiently, or get your estate plan sorted, they have the expertise you need. You can call them on 020-857-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And for more updates like this one, make sure you subscribe to their YouTube channel. And finally, a quick but very important disclaimer. The information we've talked about today is for general guidance only. Your tax situation is unique to you, so before you make any big financial decisions, it is absolutely essential that you consult a professional advisor, like the experts over at My Tax Accountant.